Welcome everyone to the Pickens County Board of County Commissioners work session on Tuesday, December 2nd. Happy snow day, everyone, finally. We are going to discuss debt and tax exempt lease purchase financing with Ann Driggers, our CFAO, Liz Woods, our finance director, treasurer, and public trustee. How did you both get more titles? And then I know we have Piper Sandler here to help us work through all this. So this is a big deal. I'll just note Greg Poshman and Francie Jacober were wise to avoid the roads and are joining on Zoom. And Jeffrey Woodruff is attending a statewide conference. And so we'll get him caught up on all this. All right. Thank you.
Wonderful. Thank you very much for the introduction. So I am going to introduce to you Robin Moore with Piper Sandler. Piper Sandler are municipal advisors who advise on all kind of things related to debt. And the purpose of our coming before you today is to give you an update on exactly kind of where we are in the numerous debt issuances that will be coming before you in 2026. And Robin will talk a little bit about the whole process, specifically for the airport, since it's going to be fairly significant for us next year. And then Liz and I wanted to update you on some administrative kind of actions or legislative actions that the BoCC will need to take as we roll through the debt issuance process, just so you get a heads up on various documents that will come before you in meetings. There's a lot of documents that go on behind the scenes in the process, and we just wanted to get you up to speed and prime you for all that's to come. So I am going to pass it over to Robin to take it away from here.
All right, thank you. Is this on?
Red light is on.
All right. Well, nice to see you. It's great to be in Pickens County. Big year ahead for the county. So as a reminder, you currently as a county have 6 debt issues outstanding. So you have 3 general obligation bonds, you've got 2 certificates of participation, you have a sales tax bond, so about 66 million outstanding. So what's ahead will add to that, but it's for great projects and very well thought out plans of not just the projects, but the financings. So the point of today is just to give an introduction of the 3 debt issues specifically and lay out the timelines and the key points. And I'll keep it high level, but feel free to ask any questions you want. And then we could also talk about the municipal bond market, since that's the market that you're accessing for capital that will fund these projects. How do I? Oh, did I just?
Oh, you can't control.
Okay.
Yeah,
okay.
Tell me
Yeah. So the 3 projects we're talking about: the Aspen-Pitkin Airport, the landfill expansion, and the joint dispatch. So just at a very high level, 2 of the 3 of these are actually somewhat underway in different phases. We'll start off talking about the airport. That's from a financing perspective, less far along. We have a timeline, we have a process, we have all the key players put together, and we've started, but obviously that's a very big project with a lot of pieces to it. So you're still, as you see here, design and scope are still getting finalized, and the financing plan we are still working through. It's driven in large part by the feasibility study that a firm called Recondo is working on. So lots of pieces are in the works to come together on the financing. So I'll talk more about that. The one bond issue that you do have far along in the process compared to the others is the landfill expansion. So as you remember, you passed an election and that authorized the issuance of debt to finance the project. So we kicked that off recently. We'll go through the timeline and the pieces that will come back to the commissioners for approval. We're expecting closing, it says here February 2026, but February, March, so early 2026. And then we're also starting more at a conceptual discussion. We haven't kicked off the financing for the Joint Dispatch Center. So that will be what's called a certificate of participation a lease purchase structure that will finance the portion of the building that the joint dispatch that you're contributing for the joint dispatch. And the goal there is to have funding toward the end of 2026. So on the airport, as you all know, no surprise to you, that was a very nice win at the ballot this year. Congratulations. It allowed the county to issue up to $340 million of airport revenue bonds. So there were specific parameters that were put into the ballot question, and those are going to be top of mind. There will be other funding sources for the project itself. You've got revenue bonds, that's the piece that we're working on with your team, grants, PFC, CFCs. You also potentially will be using some cash or fund balance. Right now, the critical piece is getting the team together, which is no small undertaking for a bond issue of this magnitude. So you have a lot of experts that sit around the table. So between Ann and Liz and the county manager and the airport team, we serve, as Ann mentioned, we serve as the municipal advisor or financial advisor, which means that we act as your fiduciary in working through debt structures. We help with all the facets of getting the bond issue together. You have bond counsel, which is Kutak Rock. They've been bond counsel for the county for a very long period of time. Recondo, who I mentioned before, they're the airport consultant. So they're very much in the works right now with their component, which is the feasibility study and sort of getting together the revenues and expenses and elements of the financing that drive the bond issue and other elements of the financing. We've started regular meetings monthly, but that will, I am sure, pick up pretty soon. We'll talk on the next slide about timing. We're still looking probably in the next 12 months or so to have bonds issued. And you can see that's a critical component to the overall financing plan for the project. One of the big pieces that we will also undertake on your behalf is to find probably an underwriting team, which is the firms that will sell the bonds, that find the investors and actually give the money to the county to build the project. And the last bullet there, we had mentioned the feasibility study, obviously a critical component. Recondo has been retained by the county to provide that study to you, which will analyze the revenues and expenses, and again, a very critical piece to the overall financing.
And I would just add at that point, also the cash flow, right? So we're trying to figure out when we need to issue bonds, when we're going to run out of our own money. That's Liz is working on that.
Yeah.
Yes. How long, I know you can't say, it's a week and a half. Does it take when you want to issue a bond to find somebody actually to purchase? Can it be, sometimes I think it could be lengthy, sometimes it could be short?
Yeah, it's a very good question. And all of these, we're going to lay out the timeline for the airport, but they all have a similar component from start to finish, roughly speaking, of when you kick off a bond transaction and you actually go to the market and you sell the bonds,
Right.
which is when you find the investors. So generally speaking, we like to have 3 to 4 months. You can do it faster. It oftentimes goes much, much, much slower with lots of other pieces. So the critical path items that are part of that process include, one, getting the plan together, which, as you can see here, so the bond piece is really the last 3 lines. We extended this out because there's a lot of preliminary work. But the critical path for most bond issues is getting the plan together, drafting the documents, having the documents go through your approval process, getting a rating, if we have one, for the bond issue. So that generally takes a couple of months. And then there's a pre-marketing period where there's a document called a preliminary official statement. It's like a stock prospectus that gets put into the market by the underwriters. It goes to all potential investors for a bond issue. And then usually that's in the market about a week. And then there's a very specific, roughly hour and a half order period of when the investors say, I want to buy Pitkin County bonds, and then we close a couple of weeks later. So generally speaking, that process is about 3 to 4 months. With something like the airport, there's so many pieces that come before it that we obviously back up the planning and the feasibility study and the overall plan of finance discussions, and that's what makes that timeline, considerably longer. But if we had all of that, we could get money for the airport, I'd say by April of next year.
Okay, so the reason I asked that question is because part of campaigning for the bond question that was on the ballot was that we are hoping with very much optimism to get federal dollars in, and so we could not have to bond for as much money. So I just want to make sure that wonder if, John, you won't be here, but wonder if we get federal dollars much sooner than later. I want to make sure that we are not going to interfere with our ability to convince the federal government to help us out, because they're going to say, hey, you've got bonding capacity now. You've already issued bonds. We don't have to, I think that needs to be part of our discussion, at least on the county side. We don't want to mess up the opportunity to keep the cost down for the county with federal dollars.
Yeah, and I would add that the bonds are the last thing in. So first of all, we look at the airport revenues, how much we can take
Right.
from fund balance. Conversations are ongoing with the FAA to figure out that grant piece. And then once that's all secure, that's when we decide how much bonds we need. So it's definitely the last thing in. It's the most expensive form of,
Right.
you know.
We have the FBO lease. We have so many other factors, but we, I think, John, are anticipating. We're meeting with our DC, lobbyist next week to kind of see what kind of time frame we might be on with federal grants, and then I'm going to Washington the end of February with the National Association of Counties, and plan on knocking on a few doors or more to see if we can't start bringing that money in soon.
That's
So-
great. It's always an interesting balancing act, because we also don't want to sell the bonds knowing that there's a gap and that you might not be able to fill it. Because what happens then is the investors will say, well, okay, you're going to sell 300 million of bonds or 340 million. You hope you get another chunk of money, but what if you don't get it? Will you be able to finish the project?
Right.
So it is a balancing act, and as Ann said, we do like to know that you have a solid plan for the other components, and we can always mobilize the bond issue to be ready to sell. You can change the number.
Okay.
You can keep changing the number up until really you sell the bonds. So we can go through this whole, we don't need to know today that you need 200 million or 300 million. We just will start the process, and that will become more clear. And then when you're ready, you sell the bonds when you're ready. In that,
Have everything lined up in order to say go.
Right, and that was why the 340 was not to exceed amount.
Right.
We could do, obviously any amount under that, and the
In
goal
pieces.
is to do the least amount.
If anybody needs to be convinced we're going to get federal dollars, they can come talk to me and I'll convince them.
good luck in DC.
What does that degree of security look like? Like when you say once you've secured federal funding, what is the degree of security that we have to prove as part of this bond issuance?
John,
John,
do you want to answer? Sorry. The degree of
Sorry,
security.
is it like an appropriation? Is it, some letter from the FAA?
Right,
or-
just granted, the assurance that we will get the funds and an agreement with the FAA.
So we're
grant
actually,
agreement.
As best we
yeah,
can.
we're actually exploring that now with COSN, what different mechanisms have been used, because the grant is likely to be given over multiple years. Sorry, I was multitasking there for a
okay.
second.
It's
But
okay.
the grant is likely to be given over multiple years, but obviously our expenditures are going to come in one of those years. And so we're researching now what mechanisms the FAA, this isn't new, has used in the past. to ensure bond repayment and that sort of thing. So,
Because we can only be as sure as we can only be sure. Because we know what's happening right now with federal grants.
yeah, and so we're going to come back with some answers to those questions, but it's not novel in the sense of, we're not making this up. There's just been different tools used.
And we have a great relationship with the federal parties right now, so
Well,
that's good.
it'll probably be in the form of letter of intent and that sort of thing.
Signed in blood.
Yeah.
Thank you.
So this lays out here the general concepts of a timeline for the bond issue. But again, I mean, we can start,
No, this is great information.
yeah, we can start at any time to be ready to mobilize if there's a thought that the bond proceeds would be needed earlier. We certainly can adjust this. What we do is we work with your team we start backwards as to when you need the money. And oftentimes that's, either one, when the cash, you don't want to keep expending cash, when, a lot of bigger projects need the funds on hand for the contract, the contract to be let. So we back out that timeline. And, right now we're still in the preliminary phase of it, but we will start moving fairly soon. We're already, I would say, probably in this chart here, the second, third month. As we get through the Recondo feasibility study, that we're waiting for a lot of that data to move us to the next phase, and then we'll start the process to select an underwriter, to start drafting documents, to prepare the credit rating discussion. And these bonds are going to look very different than the next two that we talk about. These are based on a different type of revenue stream. They're not, sales tax of the county or property tax of the county. So this is a very different type of credit. The rate is going to be higher than we'll show you for the solid waste bonds, for example. Different repayment source, different level of credit worthiness from an investor standpoint. But as we'll talk about at the end of this, the municipal bond market is very used to all sorts of bonds and all sorts of credit ratings, and an airport in the Aspen-Pitkin County community will be very well received. It's a great story. It's very unique, and it will be one that will be very exciting to have in the market.
Do you have any concerns about the discussion at the federal level about tax-exempt municipal bonds?
Oh, that's such a good question. We're always concerned. I don't lose sleep over it, but other people do on our behalf. It is always heartwarming to hear that commissioners and people like you in your role are worried about it and capable of having the dialogue that maybe you can sneak in there when you're in DC, because it is
It's
always
in there.
There's no active worry at the moment. A couple of years ago, you're sort of blur, right? Maybe 2 years ago, there was a very more, I'd say, elevated concern that, and the dialogue, tax exemption takes money out of the federal government's pocket. So there was certainly a worry that was thwarted. Obviously, we still have tax exemption. I don't think so. I mean, but I'm constantly seeing traffic of this could be talked about. There's nothing active at the moment that gives concern, but it's always out there. And there could be dynamics that change tax exemption for different elements of the municipal bond market, and that will continue to evolve. And since you're so active right now in municipal debt, that certainly will be in touch with you, and if that's a concern, we'll have to talk about what the alternatives are, and whether it's taxable debt or something else.
Well, it's a very bipartisan hot topic to this day, and really recently even escalated more with the National Association of Counties. And that's when we can all sit in the same room and agree from all across the country that we want to keep that tax exempt status. So that is a force, really a force on Capitol Hill, which we're glad to be part of.
It's a very, very important topic. Tax exemption provides reduced cost to borrow money for communities across the country. And it's, when it was actively discussed, last year, I remember circulating in our firm. I mean, the analytics of just how much that would cost collectively, counties and cities and utilities, and how much it would raise the cost of borrowing for necessary projects is staggering. So there's a lot of lobby efforts when the talks get more elevated.
Yeah, well, we're at that table too, when we go back there, all of us support keeping that status, so.
That's great. Good. Yeah. So anything else in the airport before we move to the landfill?
Landfill's easy.
Francie or Greg?
Oh,
This is the big nugget. Nope. Okay.
Francie's
We'll keep
gonna go
going.
stoke her fire, she's got a beautiful
I
fire.
know, it looks so relaxed.
I know.
That's the setting you need when you talk about municipal bonds.
Yeah.
Right there.
Just to show it's a real fire,
Yeah,
not
just
like the
like,
fake
let's
fire
put it
I
out
have in
loud.
my background.
Hers is beautiful, that fireplace in her house is beautiful.
It's very pretty.
Okay, if there's no further questions on the airport right now. Okay.
So this is your live bond issue. This is going to be the first bond issue that comes across your agenda with actual actions that you have to take. It's for the landfill expansion. It's underway. So we completed, with the county taking the lead, on an underwriting RFP, a request for proposals, to find the firm that will sell the bonds. And a lot of us went through the proposals. I believe you received four. We selected Stifel. They have worked on your bonds in the past, and we're very familiar and very thoughtful about the process and the actions that they would take for a successful underwriting. So Stifel is on board as the underwriter. We have first drafts of documents that we all reviewed. We are working on the next draft. They will come to you on your December 17th meeting, and I believe you get it in a packet before that because there's a lot of documents. And I also believe we will summarize them for you and be available for questions. The crux of the documents are, you've got a bond resolution, there's some supporting documents, and then, as I mentioned before, there's an offering document that you approve to form. It reads a lot like a municipal bond version of a stock prospectus. It talks about the bond issue, it talks about the county, it talks about your revenues and your expenses and what's going on here, the management, the makeup of the commissioners, and that's what the underwriter uses to market the bonds, to talk to investors, to get them interested in purchasing the bonds on the bond sale. So you can see here we have the key dates for the remaining portion of this financing. We actually are going to put this back. I think we prepared these a week or two ago, and you can even see in the market slides, they're already out of date. We're going to push back. We have a presentation to the rating agency. We will use Standard & Poor's. So there's 3 rating agencies, Moody's, Standard & Poor's, and Fitch. We are going to use Standard & Poor's. We'll give them a presentation that will be with Ann and Liz and team. We will receive the credit rating, begin marketing the bonds, and that's, again, usually about a 1-week period. That's Stifel, the underwriter, with our guidance and a lot of discussion with investors. The bonds are set to price in early February and close toward the end of February. It sounds like there's some flexibility, so we always like to hear that, because if something disruptive happens in the market, or there's some global event or something domestic, or, who knows? You just don't know anymore. You never know. So last spring when the tariff announcement hit, that is one of the rare events that sends the market into a bit of turmoil. So, but it comes back, and so it's nice we have some flexibility. But this is the plan for right now. And always the question is, well, what does the rate look like? It will change. So you are pricing bonds in the municipal bond market, tax-exempt bonds. The index we use is a tax-exempt version of U.S. Treasuries. So Treasuries are taxable. We price off of a index called the Municipal Market Data, or MMD. It's usually a percentage of U.S. Treasuries. They typically track pretty closely. So in the Treasury market, when rates are up, our rates are usually up. When rates are down, ours are down. The borrowing cost is also driven by the credit rating. And we are expecting that to be somewhere in the high A category, could be in the double A. You know, it's a new credit, so we'll be very interested to see what comes out. We've done preliminary work to put it into what's called a scorecard to get an assessment. So it will likely be a high A, low double A, which is a very strong rating for a bond issue like this. So where are you in terms of rates? You actually have the parameters that were laid out in the election that voters approved that had a maximum par amount or a maximum bond size of 22 million. So we're still assuming that 22 million. The second line there is net proceeds. That's actually the amount of bonds that you get. It's a function of the way the interest rates are structured. So you get a little bit more potentially based on the market. The election question had a maximum interest rate of 5.75%. So when we ran these a week or two ago, that was about 4.35%. So well within the parameters of the election. You voted, voters approved a total debt service amount of 37 million. So we're still well within that at just over 35 million. There was not a parameter voted for annual debt service, so the amount of principal and interest you pay. But you can see here right now that's about just under 1.8 million. And these bonds right now are expected to go out to 2045.
Are they coming to get the trash after that? Is that why?
No, but it's very unique. It is a very interesting project. And
It's Pitkin County trash, Aspen trash. They're probably out there combing through it right
yeah,
now.
it's very fancy trash. Any questions on the solid waste bonds?
Like historically, what is that? How is that interest rate?
It would range,
High.
you know, where you are right now at 4.3. I would expect it to be somewhere between that 5.5%. It really is, you know, it's driven by what the market is. You know, for a bond issue like this, I mean, Pitkin County bonds are going to be very well received. So, you know, we start off where the benchmark rate is, where the index is. We look at what other bond issues are pricing. And generally, you know, when you look at like a historical band, I mean, I would say 4 to 5 is probably the historical norm, sometimes higher, sometimes lower.
Because we're not risky, so
No.
it's not going to be a high interest rate.
We worked on we were the underwriter for the town of Vale, the West Middle Creek, the bond issue that financed. The town had a piece, and it was 2 components. It was about 200 million for their middle income project. And it was a very, very long process. And the constant feedback we got every time we asked our underwriting desk a question is, it's the town of Vale. Everyone loves Vale, and Aspen will be the same way in Pitkin County. Everyone admires Pitkin County. It is a very, you know, there's just so many amazing credit qualities that we have here that we had in, you know, these sort of high-end mountain communities where you're committed to doing the right thing, doing really good projects, but also have very good name cachet. I mean, these are investors that are not in Colorado. There are some in Colorado, but a lot of them are in New York or the Midwest. And so, you know, sometimes they hear names of Colorado communities and like, why is this community borrowing so much? But Aspen, Pitkin County, I mean, it's, you
Why
guys
aren't they
can
borrowing more?
You can do whatever you want. Maybe not whatever you want, but it's a very it's going to be a very well received name. You're going to get aggressive pricing based on where the market is at that time. And then we come to the dispatch center. So this is a financing for the Joint Dispatch Center. It is different in structure than the solid waste bonds. The solid waste bonds are repaid just from the revenues of the solid waste fund. This is going to be what's called a certificate of participation, or a COP. So you have, the county has issued these before. They're an annually appropriating lease purchase structure. And so a lot of Colorado cities and counties issue COPs because, you know, Pitkin's a little bit different, but in most communities, because they're annually appropriating, there's no vote that's required, and they're typically used for financing essential assets of a community. So in this case, you're looking to finance the portion of the Joint Dispatch Center that the county is contributing about just over 8.5 million for. And what's different about this financing structure than the solid waste bonds, one is it's repaid with the pledge that you're giving to investors is essentially the general fund of the county, whereas again the solid waste facility is financed with money from the enterprise. And the other big difference is that there's a mortgage on a facility because it's annually appropriating, meaning every year in your budget you need to go in and say, are we going to make this year's payment? And the answer will be yes, but because there's a legal risk to investors that you can walk away, they want to there's an indenture where there's an asset that's pledged. And in this case, we're working with Kutak Rock, who's your bond counsel, to pledge the second floor, which is where this financing is essentially being used to build. It's being used to build. We're going to pledge that as the asset under the structure, under the indenture. So we're still working through the financing plan, kind of like we talked about before. We're still in the pre-works here, as compared to solid waste where we're underway and we have the plan. So there's still some variables that we're looking at. One is the length of the financing term. So we looked at 20 years or 25 or 30. And the way that we're going to sell this, so it's a little bit smaller. You've got a few other options. Instead of going out to the public bond market, there is also the option of negotiating directly with the bank. So we're working through the details of this. And again, this is a structure that is repaid from the general fund. The obligation is from the county's general fund. And you can see on the bottom right about where this is falling for interest rates. You're at about 4.74 right now. This is as of a couple of weeks ago. This rating is our assumption is going to be a little bit higher. The county in the past, you are rated, so AAA is the highest. The county's what we call the issuer rating or the general obligation bond rating is AA plus or AA1. And there's typically one notch down, so AA. That's where we are expecting this rating to fall, somewhere around there. So that's a little bit higher credit rating. So you see the interest rate here is about 4.74%. And just for sake of running numbers, we have a final maturity of December 1, 2056. But again, we're still working through the details of this financing.
I have a question, maybe for John or Ann. How do we get away with obligating future boards appropriations?
Good question.
Yeah, so in this case, there are provisions for that in Tabor and such, where there is so Tabor exempts enterprise funds, and so you're allowed to make those obligations there. Our charter does not, so we went to a vote, and under those circumstances, you're allowed to obligate future boards. That is debt at the end of the day when you obligate future boards.
And I mean, the reality is, while it's legally an annual appropriation structure, it's really not. Yeah. I mean, there's always been dialogue in the bond community as to what happens, but if you don't make that payment, it's a big scarlet bond letter for going and accessing the bond market again. So the expectation is that if you're selling this debt, that you will make those payments legally.
Mm-hmm. Sure. Yeah.
Yeah. So
got it. It's a very wonky question. I just was curious about that.
But any multi-year obligation in Colorado, whether it's a bond or not, is considered a debt and requires either voter approval or a specific exemption that's been granted.
Did we go to the voters for the dispatch center? I don't know why I don't
No.
That will be a COP, which is a different structure, which is an annual appropriation.
Because it's exempted within Tabor. Mm-hmm. The COP.
It's not considered a multi-year debt. It's a lease arrangement.
Okay.
Yeah.
Thanks.
And I think Tom Wyatt is our
we
bond
should
counsel
let
with
Tom
Kutak
answer
Rock
that.
is just, we had him muted, he just raised his hand, we are now allowing him
Sorry,
to
I didn't
speak,
realize
so.
Tom was on.
Welcome.
did not know who that was. Yes, no problem.
And can he be a
Now,
panelist?
Tom will tell you if I
or-
was right or not.
Hi, this is Tom White, QTAC. Thank you. And can folks hear me?
Yes.
Okay. I just wanted to chime in on that last question about the multiple fiscal year financial obligation. And I think I just wanted to clarify. I think, John, when you were talking about the vote, that was actually the landfill maybe that you were thinking of, or the airport. Here for the call center COPs, there wasn't a vote, and the reason that the county can still do this is that from the county standpoint, the only obligation that the county will have is a lease purchase agreement, and the lease purchase agreement is subject to annual appropriation. Robin was alluding to that a second ago. So basically the lease is terminable by the county in any year if the Board of County Commissioners decides not to appropriate funds for the rental payments they're under for the next year. Now, as Robin says, that's going to have ramifications in the bond market, but from a Colorado law perspective, that means it's just a year-to-year obligation of the county, and you're not binding a future board. So what happens then is the trustee for the deal, the trustee bank enters into indenture of trust, and that document basically divides up those lease payments that the county makes under this lease purchase agreement into little pieces, and those are the certificates of participation, the COPs that are sold to investors. So, but from the county standpoint, it's just the subject to appropriation lease.
Thank you. That's great. I appreciate that. Go ahead.
So in the memo, the AIS for today's meeting, it says that county has not previously taken official action to codify the designation as far as enterprise funds. So we'll be doing that on December 17th, is that correct? But tomorrow, we have an item before us, a resolution declaring the official extent the county reimburses itself, and it brings up the dispatch center. Can you explain to me how and what that actually means?
Sure, absolutely. And Tom, feel welcome to jump in if I need to be corrected. But basically, there's the resolution that will go before the board allows us to use our bond proceeds for expenditures already made for the dispatch center. So it says that
So it's kind of
the
backfilling
60 days previous in construction costs, and then any design and architectural costs we've had to date can be used to reimburse the county from bond proceeds. And this is done in recognition of the fact that we won't get our funds until sometime next year, and we've already spent money. And often with projects, you've spent design and architectural way up front, and engineering, you do it years in advance before you even start to raise the funds. So that's the purpose of that resolution.
Okay.
We don't have it for the airport, and we don't have it for the solid waste center because they have sufficient fund balance.
Right.
But in this case, we want to, because essentially the debt service of the dispatch center is going to be paid for by the other agencies, then we want to make sure that we reimburse ourselves, the county, for all of the costs that we've incurred.
Because I know
For
we're
the-
already moving forward.
I wish government grants worked like that.
Yeah.
Yeah.
But so that's what that resolution is tomorrow. It's just an administrative thing allowing us to use the bond proceeds to
Okay.
repay ourselves for things that we've already spent.
That's great.
Thank you, because I was getting a little bit confused.
Yeah,
Yeah.
and the other
You
difference.
made that very clear based on this title.
Yeah.
Very clear.
The other difference between the dispatch center and the solid waste center and airport is that we've actually already started construction on the dispatch center, whereas airport and solid waste center are all in design still. And so we will also most likely have those proceeds in advance of the actual construction piece. So that's the other little bit of difference there.
And we also have enough money to do that.
So, and I need to, again, John, and I don't know, it never came back to us. I think the board, my understanding, my memory, asked that we look at maybe a change in architectural design of the dispatch center to take that new 1,400 plus or minus square feet and maybe look at it for housing opportunities. Nobody got back to us, as far as I know, unless I missed it.
Yeah, we have not brought that back.
I would like to make sure that we're not closing the door to that opportunity. I think it's a great opportunity for us to put housing either for dispatch workers or first responders or whatever. I know there's some mutual funds coming in from dispatch, you know, who we serve regionally or through the Roaring Fork Valley. It's going to provide us an opportunity for possibly 2 units there. And I don't want to miss that opportunity, because I'd rather utilize that bonus square footage to good purposes. So as long as we're not closing the door to that conversation.
I think we may have landed that on Kevin's lap on her first presentation to the board.
On top of about 20 other things,
yeah.
yeah. But I just want to make sure we're not losing that opportunity, because I would love to see us provide housing opportunities, much like the Roaring Fork Fire District does for some of their workers there.
In my understanding in the design of the facility, there will be sleep rooms for the dispatchers.
This is separate from
yeah,
this.
okay.
And it's an architectural change, it's a change order. May slow the project down, which I totally understand. I've talked with an architect, Jeffrey, who said it would be not a minor change order, but if it provides us the opportunity to provide housing, we need to look at every opportunity we possibly have. Thanks.
Okay, let's keep going on this item.
Sure. I touched a little bit on the market, and again, I'll keep this high level, but ask away if you have questions about the bond market. So this chart here shows historic, dating back to 2014. You can see the movement in U.S. Treasuries, and again, the MMD, or the tax exempt index, they track fairly closely. The 2021-22, you actually got in with 2 bond issues, a bond issue and a COP. Back at the bottom of the market, so that's great. You can see we're a little elevated from the bottom, from the trough, but the biggest question we get is, well, what are rates going to do, especially next year where you're potentially in the market 2 to 3 times. The expectation is still that the Fed, even from in here, I think we said that there was or maybe it's the next slide, a 60% chance or 40% chance of the Fed cutting rates at its next meeting. Now I think it's a foregone conclusion. The market sort of has already factored that in. There is expectations of another 2 to 3 rate cuts again going into next year. There's not always a direct correlation, but the expectation is that the trend will be interest rates could come down as a result of the Fed rate cuts, because Fed cuts that affects the very short end of the yield curve, and you issue bonds on the longer end. But the expectation is that rates are hopefully trending a little bit downward. But we're operating in a very large and robust municipal bond market. It is municipal bonds, but it's driven by a lot of factors. So generally speaking, the more uncertainty and domestically and overseas that we see, it's actually better for municipal bonds. People tend to move their money out of the equity market into more volatile investments into safer investments like treasuries and municipal bonds when there's more uncertainty and chaos in the world. So that's helpful. We certainly have seen a fair amount of chaos, globally speaking. So that's helped municipal bonds. We're also driven by supply and demand, and we are generally a market that sees 7 to 10 to upwards of 15 billion a week in municipal bonds. We actually don't have a lot of Colorado bond issues, generally speaking. Tabor makes it hard. We're generally a more conservative state. We're obviously seeing more projects in this discussion today is reflective of what we've had all around Colorado for the last couple of years. The projects there's more of them, they're bigger, but we generally don't see a lot of municipal bonds in Colorado relative to across the country and, our peer communities. And that just makes for more demand. And that's, there is a general supply and demand. When the demand is strong and there's less supply, it helps you in terms of interest rates. So a lot of really good tailwinds going into next year. We start fine tuning that as we have our calendar and we get closer and closer to pricing. But as you all know, you're operating in an environment where the project and the timing is most important. The timing of getting money relative to the timing of the market is usually not something that we do. We align the timing of the bond process to when you need the funds, and then if we need to fine tune that, we certainly do. We work with your team to make sure we're optimizing and staying out of markets that could be a little more chaotic, but generally speaking, we stick to the timeline based on when you need the funds. And I think we have a little more of that on the next slide. This is just showing that, so again, the 41% is basically 100%. The Federal Reserve is going to cut one more time this year at their meeting next week. Fed Chair Powell's term is up. There's talk of if his replacement is more aggressive in rate cutting, then we'll see that come through next year. But we're still predicting this has up to 325 basis point market Fed fund rate cuts into 2026. So trend is in your favor, and it will be interesting to see how it plays out. But generally speaking, the municipal bond market will be there for you. It's a very strong market. Again, Pitkin County is a premier name. You've done all the right things to have your management and your finances very conservatively and thoughtfully managed over the years, and that really comes to fruition and pays dividends when you go to the bond market. It's received very well by investors, and these projects are very, very interesting, very thoughtful. A lot of planning and community support is behind them, and all that will, we anticipate all that will bode very well when it's time to access the bond markets.
What is a bond unit? Like when someone buys a bond, what's the unit?
So
purchasing?
the unit is generally, so for your solid waste and your COPs, it's $5,000.
Okay.
Depending on the airport structure, it could be 5,000. It could be in bigger denominations like 100,000, depending on where. If it's below investment grade, that could end up being larger denominations. It could also end up being 5,000. But unless very, very, very rarely, Denver did this couple of times, and I think it's a headache all around. We see what they call mini bonds of $1,000 denominations, but we never talk about that. $5,000 denominations, and most of the bonds are sold to institutional investors, but bonds are also purchased by individuals. And in communities like here, when where the community is very involved in the projects, where there's a and probably even greater benefit to tax exemption. We talk about along the way, and we work with the underwriters. In fact, I think we already got a question from a potential community investor or community member who asked about the solid waste bonds. We often make an extra special push to make sure that the community knows that these bonds are getting sold and that they're available for purchase.
Interesting.
Okay.
So
We'll
you
buy a
two
few
could
units
own
at $1,000.
$5,000
I
worth
think that would be a conflict of interest.
of the solid
Now that
waste.
I'm curious.
Oh, shucks. I got 1,000, you mean 500,000, 5 million, 5,000?
Thank you.
You're welcome.
It's a term we don't hear often when we're talking about the airport. Great, good stuff.
Thank you.
Let's get that money and get it done.
Yeah. There's no more questions for Robin. Just give you a heads up, and I think we've already covered it, but tomorrow you'll see the reimbursement resolution for the dispatch center. That's just to cover past expenditures if we move forward with that. And then on the 17th, Liz, who's taking the lead on the solid waste center, will be bringing those and the enterprise fund resolutions for the airport. Those are really just to say that we are running our solid waste center and airport fund as enterprise funds. And you all know this, but you know, there's no taxpayer dollars and everything. It's just kind of codifying, this is what we've been doing. So we have that documentation for
Good idea.
the future. Yeah.
Great. Thank you. Thanks.
Yeah, thank you. Yeah,
Careful
very
out there, it's
clearly
really
explained.
slippery.
Thank you. Are there any questions from Francie or Greg online?
Nope, I'm good.
Yeah, I'm good too. Great presentation, very clear. Thank you very much.
Thank you. All right. I find this stuff so interesting, so thank you.
Oh, we'd love to hear that.
Thanks for putting
Talk
you
all
on
day
that-
about
what was
bonds.
that board at down at-
I know.
Made my day.
Number girl. Francie's house.
See you
is
guys
making
tomorrow.
All right, you guys get some time back in your lives. All right, what are we going to do with ours?
Francie's making me cold looking at her warm, cozy house there. Little nest she's created.
Connie, it looks like, is here early. Connie, are you able to start early, or do you need some supporting staff?
There are the staff that know that it starts at 2:45.
2:45.
So I don't know whether the staff would be available sooner.
Okay. Are there a lot of people? Could we maybe shoot an email out and?
Let me
See.
try to text or call and
Okay.
get a hold
Hey,
of
Kelly,
Yes, Greg.
I could use a short break. I need to go out and do a quick errand.
Oh,
I don't know if we need to take a break now or
I wanna
kind of schedule that.
We can take a break now. I think we might continue to move on, and
I'd
see
like
if we
to
can
move on
start
so I
some of
can-
our other items, and I'll catch up with you, and then they'll be videotaped. So if you miss any board interviews,
Right.
you can review them.
I'm actually going to be able to listen online. I may
Okay.
not be able to speak, but I can listen in while I do this, and I'll be right back
Okay.
as soon as I can.
Okey
Thanks.
doke. Okey doke. All right, well, why don't we take just a 5-minute break then till 2, and we'll get ourselves organized. Pekin County Board of County Commissioners work session on Tuesday, December 2nd. We are running ahead. And so we are going to do future agendas currently, and this will give staff who are going to join us for the fourth quarter budget supplementals some time to get here. Okay. John, any future agenda items we should discuss?
Let me just check my electronic memory.
Yep.
Just checking my electronic memory. We don't have anything listed in future agendas right now.
Patty.
Yeah, just a reminder, on January, December 9th, I will not be available till 11 a.m. So if you want to do exec without me or wait for me, I will be here at 11. And then on the 16th of December, it's a work session. It's our joint session with Open Space and Trails. We go into exec with Open Space, but we have a regular exec with BoCC prior to that. Can we just clarify that? Because usually we don't have our own exec and then go into their exec.
And I can look at, but which date was that? I'm
It's
sorry.
the 16th.
16th.
It could
okay.
just be the reserved space for exec isn't been taken off yet.
And we have a future agenda meeting tomorrow, so I'll follow up.
Okay, great. And then I'm going into January, so this is for just future notes, and I will bring it up again closer to January 6th. It's a Tuesday work session. I will be in Denver at UC Health that day, thankfully, gratefully. So I will be out that whole day. And hopefully the weather will cooperate with my travel. And that's what I have. Thank you.
Okay. What are we talking about with open space and trails? We usually have items listed.
I think we're going to be talking about an exact use of open space and trails funds.
But normally when we come out and we have our public session, there's some kind of community presentation, and I don't see anything listed.
Yeah.
So I'll figure that out.
Is that? Yeah. It's not
On the
North Star
16th,
Day.
yep. Okay. Let's see if I have anything.
And I do
want to maybe figure out where to add working agreements.
Okay. Anywhere you want. Do it on this 6th of January.
I'm really trying to
early
get
in
them
the
done
morning
before.
on the 9th of
then
December.
it's Jeffrey's deal.
Yeah.
I'm trying to get them done by the end of the year.
I do have a little quick public service announcement.
Mm-hmm.
The Pekin County Open Space and Trails calendar is due to arrive any day. There was a delay in publishing or something, so everybody know it's coming. It'll be here for Christmas stockings, I promise.
God. I give one to my dad.
Because
every year.
mine is falling apart.
All right. Francie, do you have any future agenda items?
Nope.
Okay. Is Greg, can you see if Greg is on? I just want to double check.
Yeah, he's on.
Okay. Greg, just let us know. I think you had some days you were out, and I want to make sure we get them noted. So just, it looks like on the 9th, attending virtually. If there's any others, just shoot me a text, and we'll get them added to the agendas. How about we do open discussion? Does anyone have any open discussion?
I guess I just made mine about the calendars.
Yeah. Any other?
Well, I'll just share something.
Go ahead.
So Saturday, maybe it was Sunday, I got a message from my son Ty that he would like to have some help with our pregnancy testing and vaccination. So one of my grandsons who was staying with me, he and I went down. We just grabbed, a jacket and hat thinking we would be down there for a couple hours. We were down there 6.5 hours in the snow,
Oh, gosh.
25 degrees, and we froze. So, just saying, before you walk out the door, take the worst conditions into consideration.
And how are the cows? Are they pregnant and vaccinated?
We got them all done, all 299, and we had a pretty low percentage of cows who weren't pregnant, which is always good. So it was good, and it was fun to be out in the weather. It was just easy.
All right.
And I would just note from the board, you may have already seen this from CCI, but the state is announcing proposals for major overhauls of county human services, including centralization of services. It looks to be Medicaid and SNAP, as well as regionalization, which could also involve Medicaid and SNAP, but also TANF and some of our senior programs and CCAP. They are presenting both today and tomorrow at CCI, so hopefully there will be more detail. I believe Jeffrey and Lindsay will be at both of those sessions, and then on December 12th, there's going to be a CCI steering committee discussion. These will all need to go through legislative approvals, so we're going to get bites at the apple on this, but we don't have the details to share now, but we will be putting those together and bringing that back to the board.
There's been a lot of chatter among commissioners about the lack of stakeholding around such a major, significant proposal in a lame duck year. At the CCAT retreat a few weeks ago, governor's staff for Human Services and other other head staff for the governor were there and mentioned nothing about this to anybody. So it's ruffling feathers. Anyhow.
I would say certainly in the 20 plus years I've been in county government in Colorado, this type of centralization or regionalization would probably be the biggest change that the state's made to administration of these services in that time and probably long before that. So it is it's significant. I don't know that I think staff is having the same concerns about these proposals being developed without a lot of stakeholding at any level, but are waiting to see the details to try and understand if it's economies of scale play that may be helpful given the budget cuts, or what it is. We can't really evaluate it now, but yeah, there's chatter at all levels for sure.
Yeah, it's just shocking because when they stood up the whole behavioral health administration, it was the result of years and years of study, and I can't help but think this is sort of analogous, but just completely out of the blue.
And they're still working on behavioral health, just like setting up the child care stuff. They found all kinds of glitches because it happened quickly and it wasn't thoroughly vetted, and now they need a backstep. This is going to be even more difficult.
Yeah. Okay. Well, all right. Thanks, John. Is there any other open discussion? I don't have any.
Be careful, it's slippery outside, right, John?
Yeah.
It is slippery outside, but I bought new boots, literally.
And wore them out of the store.
I wore my slippers to get lunch because they were less slippery than my other shoes. Yes, and folks, take the bus if you're coming up Valley. It took hours for people in their single occupancy cars today. Okay, all right, let's move on. Let's go to fourth quarter budget supplementals. Hi, thanks Connie for your patience.
Good afternoon, Connie
and
Baker,
flexibility.
Picken County Budget Director, and we'll have some staff here also presenting their supplemental requests. And for fourth quarter supplementals, generally speaking, we don't have new projects. By this time of the year, there shouldn't be something new just for the remainder of the year. Those should be incorporated into the 2026 budget. So we have a number of cleanup items. A few of these are items that we've been tracking through the year, knowing that there was a good potential we could need a supplemental request, and just waiting for the end of the year to be able to quantify the amount of the request. There are some others, like the SNAP benefits, that we won't actually know our final cost until the end of January. So we're estimating how much extra we may need to make sure we're covered budget-wise. And then a couple of requests like child support services and the RAFTA Zero Fare Pilot program are items that the board has already approved in the past, and this is just making sure they are added into the budget. So we'll start with the detention cash bonds, and Dan is here to present that supplemental request.
Hi.
Good afternoon. Am I good?
Red light on. Yeah.
Okay. Sorry, I've bad luck. Dan Fellon for the Sheriff's Office, and I'm here to talk to you about the cash bonds. So statutorily, we have to receive people's bonds when they pay them in cash or through a bondsman, and then pass that money back through to the courts. And what we've experienced this year is a much larger increase of people paying their bonds in cash, which means a much larger intake of funds and then moving the funds over to the courts. So this is just to basically align the budget with the actual expenditures versus what we anticipated, which was a lot less this year. I'm happy to answer any questions about that.
Are more people getting put on bond, or?
I don't know that I would say more people are getting put on bond, but I would say the bonds are being set by the courts possibly differently. And also, bonds are normally set as either cash or surety. And a lot of people are choosing to pay cash to get all of their funds back versus going through a bondsman where they don't recover any of those funds, even if they go from arrest to completion of their trial.
Questions for Dan? All right.
Okay.
Seems clear. Thanks, Dan.
Next up, we have the Attorney's Office with Professional Services, and Rye is online.
Hi, Rye.
Hi, Rye.
You're on mute, sir. Start over. We got that.
Sorry about that. Ryan Neely, County Attorney's Office. Sorry I'm not there in person. You should have the write-up that Connie and I put together for you. I think it's pretty straightforward with respect to the increase in professional services that the County Attorney's Office has incurred in 2025. I can go into the specifics if you would like about why those dollars are so disparate from what was originally projected at the beginning of the year. A lot of that is driven by the timing of Shoshone permanency and the need for professional services in the form of legal counsel and engineering that the county has incurred to respond to the River District's Shoshone permanency project. I would anticipate legal services and engineering services to continue to be higher in 2026 as well, to respond to that particular project. There was also a backlog of some work that needed to be done, particularly with putting together a water inventory for the county. That also required particularly a large amount of engineering work, but also legal work. The water inventory was and does inventory all the water rights that the county owns, whether they be held by the Open Space and Trails Program, some other unit of the county, or the BoCC itself, and then tracks how we acquired those interests, how we need to maintain those interests, and what we need to do in the future to protect and prioritize and strategize around utilization of those interests. All those things cost money. A lot of these services were previously borne by the, not just in this year, but in prior years, borne by the Healthy Rivers and Streams Fund. That program has recently allocated some of its dollars to additional projects that have not been historically on its radar, including Shoshone permanency, as well as some other projects we have coming up. So talking to Connie and Lisa McDonald, took some of those dollars that had been paid out of the Healthy Rivers and Streams program and allocated them to the professional services budget for the county attorney's office. That particularly felt appropriate because the staffing shortages for budget year 2025 in the county attorney's office likely led to increase in the need for professional services. Probably not 100, well, certainly not 100% of the need, because some of the services we received in engineering and legal were something that we likely would have incurred irregardless of whether we had a full staff in the county attorneys or not. But some of that certainly can be attributable to the fact that we started the year with one attorney in the office, picked another one up halfway through the year, and we're planning on being at full staff in January of 26. Got any questions about that? I'm happy to talk more about that, but I know you're rolling through these things.
I'm good supporting water.
Yeah, me too. I would say the quality of the information and opportunities that have come from the provision of these services has been commensurate with the amount of the increase, and exceptional this year. I think our water program is farther along than it's ever been in its history relative to understanding our inventory and the opportunities out there for the county. Francie.
Yeah, thanks, Kelly. I was going to say a similar thing. It is amazing that we have an inventory now. It is amazing we did not have one before. So I'm really glad that we do. I think Rye has done an amazing job of educating himself on water issues. And that was one of our requests for Rye, is that he get some kind of coaching. Well, this has been pretty amazing coaching for Rye and the county to use these attorneys and these engineers. It's been amazing. So money well spent.
Great. Thank you, Rye.
Yeah, I think both those points are great. And it has been a learning experience for me for sure. And I am excited about where things currently stand with the program and the opportunities that are in front of us right now. So thank you for the support. I'll be back when this comes during a regular meeting, and I'll be prepared to present again.
Okay, thanks, Rye.
Thanks, Rye.
Thank you all. Have a great day. Get home safely.
Be safe out there, Rye, please.
I'm sitting at home. You guys are the ones that
Gee, I don't know. I turned around. I drove for 2 hours this morning and ended up right back where I started. I got to the animal shelter turnoff and went nowhere. I got out of my car, scraped my windshield, nobody was moving, and I thought, well, Kelly said it took 45 minutes on the bus. I could be home by then. So I turned around and went home.
That's crazy.
I'm so glad I don't have to drive home this afternoon.
Yeah. PSA
Congestion
for taking the
pricing
bus,
wouldn't
people.
Everybody's out and about.
The parking lot in Carbondale had no empty bus. None, zero. The buses were packed.
Wow. The town is quiet. That's weird. Everybody's at home putting up their Christmas decorations because Mountain Greenery was full. They can't take any more.
All right, let's keep moving. SNAP Direct Client Benefits.
The next two requests are from the Economic Assistance Department, which is in the Human Services Fund. I'm not sure that we have, is Norma online? Oh, great. Okay, so Norma is online.
Hi, Norma.
Hi, how's everybody?
Good, thank you.
Good. So yeah, we're requesting a supplemental for the SNAP benefits, and it's for $80,000, and as you know, it's for our residents, and oh, sorry, 35.
No, I'm sorry, I skipped ahead.
Oh, you skipped ahead. Okay,
my
sorry
mouse
about
did
that.
something strange.
$80,000 we're requesting, and it's SNAP benefits for our residents here in Pekin County. And we were just requesting this supplemental to provide benefits to our clients.
Okay, and this is Healthy Community Fund?
No, this is Human Services Fund, so economic assistance within Human Services.
I have no problem with this.
Okay. Then the next request is also Human Services. It's Child Support Services, and it's related to a new IGA that the commissioners had previously approved. And we're just increasing the budget to match up with the IGA that was previously approved. And if you have questions about the program itself, Norma's here to answer.
No, if I recall, we hadn't increased the budget in many, many years. So thank you to Garfield County.
Yeah, I was going to say thank you to Garfield. We appreciate that assistance, and think vice versa.
Okay, thank you, Norma.
Thank you.
Thanks, Norma. And then next, we have workers' compensation premium. I'm not sure if Brett Bergman is online or not. If not, I can speak to it.
This one's pretty much a no-brainer also. Why do we have any choice?
With our workers' compensation, of course, we budget according to what's anticipated. But they do have an audit mid-year where they go and reevaluate the premium based on the actual number of employees, the actual salary levels, rather than what was given to them as an estimate earlier. And so with that increase and some increased employees, there's a $90,000 budgetary increase needed in this line item.
I don't think we have a choice.
Good. It's good to comply with Colorado law.
It does.
Probably a good thing.
Yeah.
And then our final request is another one that was already approved by RAFTA's board, the Zero Fare Pilot Program, and Linda Dupriest is online. And this one is increasing the county's budget by oops, I'm sorry, I'm on the wrong one.
A lot of money.
Last request, $270,000, which is the amount to cover the October and November free fare for RAFTA.
No, I think we were enthusiastic at the EOTC to approve this. Linda, I think it would be great if in a future EOTC meeting we get an update on how the free fare pilot went.
Yeah. They have not sent me the results. I don't think they've compiled the survey results yet because it just ended November, end of November. So I'm eager to see if it shifted trips from car trips to transit, because that's an important question we asked them to ask on the survey. So we'll be waiting on that, and I'll report on that when we meet again.
Okay. Well, I know it saved me a few trips when I put my 8-year-old on the bus.
Yeah.
So, thank you.
Okay, and that was the last of our requests, so fairly simple this go-round. And we'll be back for first reading tomorrow and then second reading of the resolution on December 17th.
Great. Thank you, Connie.
And I just want to confirm, Connie, we had a discussion this morning about some additional open space and trails appropriation for a Forest Service support position.
I had a conversation with Gary this morning, and doing a fourth quarter supplemental really doesn't do much good. That would give him budget for the month of December. When the board does first reading of the 2026 budget adoption resolution tomorrow, it will not include that yet. But we'll also have a number of other changes with the final mill levy certifications. So on December 9th, the board will be able to approve an amended resolution both for the budget and the mill levy certification, and at that time it will be added.
Great.
Perfect.
Thank you, Connie.
And
Don wanted to throw in one last-minute big change for you in the budget. I think he's working on more, so be prepared.
Just to make it fun at the end.
He keeps saying, "Don't blame me, don't." But it really was his idea. Tomorrow, just a quick question. While I have you here, I'm just trying to figure out timing for things. And how long do you think your budget and mill levy presentation will be?
Not very long. I can give a brief summary, and if the board has comments or questions. So I have a fairly quick review.
I mean, we want you to take your time. I just thought if you had a ballpark guess.
15 minutes.
I was going to give you half an hour.
Yeah, me too. Okay, that's great. Thanks, Connie.
Yeah, half.
And we'll be prepared to vote on these at first reading tomorrow as well.
Okay, thank you.
Thanks a lot.
Right now, we're really ahead of schedule.
I know.
Thanks, Connie.
What are we gonna do?
So can I ask a question?
All right. Yes, and do you want to? Should we go on a break? Or do you
No, I want to ask a question
public?
while
Okay.
it's still in my head.
Go ahead.
It's related to the APSHA board.
Yes.
And we have a gentleman who's an alternate that's applying for Jim Ward's permanent seat to fill his term. Has he been in attendance, Peter, and an active participant?
Yeah.
Okay, that's all I need to know. And then can we, at this time, look at appointing someone for the alternate position if we decide to move Peter up?
I think we can.
Okay, thanks.
Yep.
Then, we have one more interview with Linda Manning next Tuesday. Okay.
All right. Well, we are going to wait for staff and citizen board applicants to join us, and so please hold tight, folks, while we take a break until we've gathered everyone. We are running far ahead of schedule today.
So
Thank
I'm
you.
going to go upstairs and ask Charlotte if she can reach out to the applicants, see if they might be, because I think Jim's just across the hallway. See if they can come over.
He doesn't work for the city anymore.
Oh, that's right, he's in private practice. That's right.
All right, welcome back everyone to the Pickens County Board of County Commissioners work session on Tuesday, December 2nd. We have an opening on the APSHA board, and so we have several citizens who are interested, and we will interview some of them today. And I'll turn it over to Charlotte Anderson to kind of give us the status of this process.
Thank you. Well, we do have 3 applicants for this position, and this is a vacancy due to John Ward's resignation. Mr. Pomeroy is here for his interview, and I will let you all ask him the questions and let him take it from here.
All right.
And we still have Linda coming in next week?
Yes.
Is the application still open?
No, it's not.
It's closed. Okay. And do you know, is this a county appointment only, or is this a city-county joint?
No, it is according to the IGA, both the city and the county have to interview. I've sent those applications on to Nicole to see when we could get those scheduled after you all do your interviews. And then also Peter, who's going to be interviewed today, is already on the board, but the IGA states that you have to interview him for him to be considered for that regular position because he's an alternate. I know most of the time you guys just make that decision, but city has to weigh in on that as well.
Patty had a good question. We can appoint an alternate from this group too, right?
If we decide to move Peter up to the permanent.
I'd have to look back on the
Okay, we got time
the
till next
bylaws
week.
and
Yeah, we've
stuff,
got time.
but yeah, I will check on that.
That is helpful. Well, Jim, welcome. Generally, we invite you to tell us about yourself and why you're interested in this board and any involvement you've had in the topic or the board's work. And then we do a round robin of questions.
Turn on my
Yep, red
It's
light
on. Yeah,
needs
red
to be
light's
on, and that way grassroots can pick up.
Perfect.
So please, go ahead.
All right, so Jim Pomeroy. I am a lifelong Aspen resident. I have worked for the city for about the last 14 years, and then at the beginning of this year, I decided to make a change and left the city and started my own company doing consulting and helping people get through building permits. I have lived in APSHA housing for most of my adult life. First up at Aspen Highlands, when they first opened up there, we lived on Cloud 9. And then for a short period at Centennial, and then my current house up in Williams Ranch. My main reason for doing this is because, one, I really believe in that program. I think the program makes our town, our community, our businesses, really every part of our town better. And I like to be part of making things better. So being on the board seemed like a natural extension of that. So that's my main reason literally for wanting to do this, is to just help make things better.
All right, great. Questions for Jim. Patty?
Hi, Jim. Gosh, I haven't
Patty.
seen you in a while.
I
It's
know.
so nice to see you. Usually at the grocery store.
Usually that's where I see half the town.
I know that when you first started with the city, you took on a tough job. Yeah.
Yeah.
And you handled it and you managed it. So do you think you can apply some of those very diplomatic, tactical skills? Because, sometimes, as Kelly can attest and Francie, the APSHA board can get a little difficult. Not the board itself, but the issues they have to deal with.
Without a doubt. I mean, you're dealing with people's livelihoods and being part of the community. That's a very difficult situation. I can understand that. Yes, the short answer is yes. I think I can. I think I have a lot of proven skills at dealing with conflict and successfully. My wife says that's actually one of my superpowers, is I have a habit of turning people who maybe I didn't get along with right away, but turning them into friends, and mostly by listening to them and hearing what they have to say and being sympathetic. I mean, we all have to deal with being up here. We all have to figure out how to make it happen. And so you have to be willing to at least listen to them and what their concerns are, but you also have to be fair and follow the rules. So the balance is trying to explain one while following the other. So
Yeah, good. And know how to duck.
Francie.
Thanks, Kelly. I have two questions for you. Hi, Jim.
Hello.
The first question is, did you help people get through the permit process faster?
I generally have been pretty successful, yes.
What is fast now for the city?
If I can get through in a round or two, that's fast. So I would say a few months, 4 months, depends on the permit.
Yeah.
Commercial permits, I can usually get through in about a month. Residential sometimes can be 8 months or longer, who knows? It all depends.
Okay. And the other question is, you like to make things better. What needs to be made better at APSHA, in your opinion?
Well, there's several things. I think, first off, a lot of making things better is often just making sure you hold the line to keep things from getting worse. I think that's the first step is that it's already a pretty amazing program, and I think we need to keep it an amazing program. So we have to work hard to make it from, backsliding, from getting to be a worse program. That's the first thing. The other things is I do think that there is how do I word this? One of the things I think is important is also having some common sense and looking at things in a realistic point of view. And you can't go too far out on a limb with that. But I think it's important to have that judgment from your experiences in your life history and everything else, and being able to apply that towards anything you do. And I think this position is especially true of that. And sometimes I don't know if that gets done, and I think it could be done more.
Interesting. Okay, thank you.
Mm-hmm.
Are there any, I want to build on a little bit what Francie said. Are there any specific policies that you've either been glad to see changed recently that you know of, or that you
Well, for myself, I
want
think one
to
of
be
the things that
changed,
was a
or-
positive is trying to figure out how to deal with self-employed people, which was really hard, and because I could see that becoming a huge problem. And more, we have people who are in that sort of gig economy, and they're still helpful. They're still really important part of our community, and we need to figure out how to make sure they can continue to be housed and have a place to live. And I saw those changes to the policies, and I thought that was a really positive. Figuring out how many hours equivalent and so on. And I do think that there is some challenges still to figuring out that your services are actually within Pickens County or not. And I think that needs to be dialed in still a bit. From what I understand, there's some challenges there as well. And I think, and I'm sure this is a brand new thing, and I'm sure APSHA will start presenting some situations, and it will grow as we get cases and things to look at, and then these things evolve, and that's what I think one of the evolving policies that will continue to grow and needs to grow.
Have you gotten good advice from them on sorting out what you need to show?
I have not. I've just looked at, I've never asked. I just have looked at what's on, and on there it talks about how to figure out, because I do billable hours, so it's like an attorney. It doesn't really translate to anything.
Mm-hmm.
So, but there is a thing in there about taking the amount you make and dividing it by the minimum wage to figure out how many hours you've worked. And it would be interesting if I had to figure out.
That's what we use as a floor. I'd
Right.
say.
Yeah, exactly. And then I'd have to figure out, also make sure that they understood, all my clients, they're all building in Aspen or Pickens County, but these are the things that I think are still to be defined by the system. And there haven't been enough cases probably to really define that exactly how we're going to handle these odd situations that come up. And like I said, with the changing workforce, I think it's going to become more and more of a challenge.
Yeah, I would say it has been a challenge. There's been some differing opinions where some people think that your W-2, we should just be housing staff who get W-2s from within
Right.
Aspen and Pickens County.
I'm an S Corp. I
And-
get a W-2.
And getting,
yeah.
I'm just saying, this is, and then others that
No,
want to
it's-
have a
yeah.
little more flexibility about who gets housed. So it is an ongoing tension for sure.
It's clear.
Yeah. Okay. All right. Well, thanks. I don't think I have any more questions unless there's any other topics that you, are interested in. The APSHA board, I would say, we have made some changes over the years so that more of the violations, we have a sort of a different process for handling violations where the the violations are spelled out very clearly in the rules, and then we have a schedule that goes along with them that, you know, staff can administer some of those, and then they go to a hearing officer. And then if there's an appeal from the hearing officer, that's when the board sees them. So
Right.
it sort of has freed up a lot of time in the APSHA board to focus more on policy and programs.
Yes.
Which I think has been good benefit for.
No, I think the overall, there's been several changes, that along with having sitting members from the county commissioners and the council on APSHA has been, I think, a really positive change, made it a much more powerful body, and they can actually make decisions. And I appreciate that. And I think most of the changes have been for the best, and I think that's where we are, and I think that's good.
Good. Well, thanks. All right, and then we meet, the schedule is sort of generally two Wednesdays a month, but oftentimes, like in the summer, July will go down to one a month, you know, November will go down to one, December will go down to one a month,
Right,
things
it's
like
Christmas
that.
week, and it's hard.
And, but that is generally when the meetings are held. They're held in this room from 4 to 7. There is a Zoom option typically if you need to attend that way instead. So that's how it goes.
Cool.
Yeah. Great.
All right, great,
Nice
thanks.
to see you. Thanks, Jim. All right, and we continue to run ahead, so we just keep taking breaks until our next folks arrive. I might, Abby, let's see, go online, see if maybe Peter, I'm guessing he would be on Zoom, but he might show up. Who's that number? Oh,
Everyone
that's
said they would
Greg.
be here, but I'm not sure.
I think that's Greg's cell phone. Let me double check. Yeah, that's Greg's cell phone. Okay. All right, Grass Suits, we'll go ahead and take another break. Thank you. Okay. right, welcome back, everyone, to the Pickens County Board of County Commissioners work session on December 2nd. We are hosting some citizen board interviews for the APSHA board, and we have our second candidate here, Susan Dillingham. Hi, Susan.
Hi.
Welcome. These interviews are pretty short. We generally ask you to tell us about yourself and why you're interested in this board and any interactions you've had with the work of the board, and then we'll do kind of a round robin and ask you some
Question and
questions.
answer, okay.
Yeah, go right ahead.
I just did a little thing because it was easier for me to
Sure,
read
however you
something
need.
to wing it. Good afternoon. My name is Susan Dillingham, and I've lived in Pickens County since 1971, when my parents returned here after I was born in Oregon. I've lived in nearly every corner of Pickens County, including Redstone and Woody Creek. I moved to Woody Creek when I was 12 after living in the Smuggler Trailer Park before it was APTA housing. It was still a long distance call to Basalt. We shared a party line. There was no bus service, and the tavern was a gas station and grocery store. After my second child was born, I lived in Redstone for about 6 months before I was finally able to get into the market by buying a home, a mobile home in Elgeville. I've been a realtor here in Aspen and Pickens County since I was 20 years old. So this is my 39th year in real estate. I love it. It's always challenging. There's always new problems, new properties, new people. Throughout my entire career, I've been acutely aware of the housing challenges facing the working people in this valley because I too have experienced them firsthand. When my children were 8 and 6, 22 years ago, I was fortunate enough to win an employee housing unit at 106 North 8th Street. That opportunity allowed me to move my family up into town and get my kids into the school system. When Levi graduated in 2014, he was the 4th generation in my family to graduate from Aspen High. Without the APTA housing, I probably would not have been able to stay in Aspen and raise my family. After that, I won another lottery, and I was able to move to 75 Fobby Loop, where I stayed until after my kids graduated high school. And at the time, I was living in a 3-bedroom. I was a single person, and I had an opportunity to buy down in Lazy Glen. So now I'm in RO housing. So I've gone from a couple categories now to RO housing down in Lazy Glen. And I really thought that after both my kids were gone and I was in a 3-bedroom and I didn't want to rent and have a roommate anymore, I was looking at that time for an exit plan for myself. And I was just lucky enough to be able to find something in Lazy Glen and be able to stay and open it up for another family who, I believe the family that moved in there had a 4-year-old. So now they've been here, probably been in there 8 or 10 years, and their child's gone through the school system. So I think that APTA is a really, really good program, and it is worthwhile. And I think that some of the things that I could help with being on the board is having lived through the program, having experienced buying in the lottery system as well as buying in the RO system. I think that with my experience, most of what I have done is really concentrated on contracts. Dot your I's, cross your T's, make sure that everything gets done properly. I've also have a great ability to interpret title commitments, docs and decks, governing docs, things like that that I've had to do in real estate, to help my clients over the years. So I've also lived in APTA housing for over 22 years. And I just think that I can bring, with the real estate piece as well as living in APTA, I think that I have a good, round experience, I guess is what I would say.
Wonderful. Thank you.
Yeah.
All right. Questions for Susan? Patty, go ahead.
Hi, Susan. Susan and I have known each other for quite a while because of family connections and
Yes.
other things. But
Yes.
so I'm excited. I was excited to see that you were applying for this. Thank you for doing so. So in thinking about APCHA as a whole, you know, there's been a lot of conversation over the last how many years, Kelly? I mean, it's highs and lows, but it's pretty constant conversation on improvements and consistency and et cetera. So do you have any thoughts as to areas of APCHA that we can camp on the good and make them better, or we can camp on making them good? Any thoughts as to improvements into the program?
Well, I always thought, especially when I was going through my second purchase, that this is, you know, and also being on the real estate side of it, I understand contracts and I understand what happens with it. I think that at least, you know, when you have 80 people that want one unit, it was this is the contract. There's no, you know, varying from it. There's no financial, you know, if you don't have your loan totally in line. And then really when you get a lender letter, you know, a pre-authorization letter, it really isn't worth the paper it's written on. Because what they've done is they have taken a conversation with the buyer and they have said, oh, okay, you work at Alpine Bank and you make $50,000. You have a credit card of $5,000. So they just basically take everything that you tell them and they go and they put that into their little formula and they go, okay, yeah. Looks like you should qualify for $550,000 or whatever it is. But really that isn't, they haven't done anything to verify all of the information. It takes about 3 weeks to do that. And so I think that some of the things that I feel could be worked on or helped is to have a little bit more buyer representation, or have someone that, not as an advocate for those buyers, but someone that actually helps them to understand what they're doing, the consequences of it. Because even when I did it, the last time that I changed houses was from 106 North 8th Street to Fobby Loop, and that was during the mortgage crisis. And at the time, I was modifying my mortgage. It took 14 months for me, and I applied at Wells Fargo for said loan for $100,000 less to move across the town because I needed to. You know, I couldn't afford my payments. I was going to lose my place. And so I, again, won a third time. And I was in the contract and we were going down the row to get that done. And Wells Fargo came back to me and said, no, we won't give you a new loan for $100,000 less. We'll continue to modify your mortgage. So I ended up, what happened with that is that APCHA decided that they would just allow me the time to find a place to live, and that they would give the other property to the people, the buyers. Mm-hmm. And they never modified it by amend extend. They never did anything like that. And so we were getting close. I could not find a place to live. I could not find a place to buy. And so we came down to the end, and I postured that I could sell the house. I was ready, willing, and able to sell the house, gave them 3 days notice, and they said, that's when they said, oh, well, they haven't been working on their loan or doing anything to come to this. So that's where I think that a lot of things with contracts could be cleaned up and made better. They lost their earnest money, and APCHA ended up putting them to the top of the line on another property and giving it to them, if I remember correctly. Mm-hmm. And I think it was called the Dillingham Clause.
Thank you.
So I think that buyer
recently.
representation, I think that the people could really use someone, not an advocate, not an agent, but an advocate that can explain things to them. My first sales were to first-time home buyers, so you have to explain the contract line by line. And just to help them, because I think it would make things go a lot smoother. And I think that when I was buying, and I don't know if it's now, but you could hardly even put in an inspection objection, even to a brand-new property. When I bought Fabi Loop, I ended up 4 months in and finally figured out that there was a pinprick hole in my gas supply line to my stove. That, and the fan was not venting out, it was venting into my wall. And that's why I was getting so incredibly sick with no fever. Luckily, we didn't smoke.
Yeah.
Yeah, the guy was like, the gas levels were off the charts.
Well, I do think we've made a lot of positive improvements since all of that. Which
It's
is good
been
to say.
10
Yeah,
years
yeah.
or so, yeah, at least 20, I guess, maybe.
Yeah, no, and happy to talk more about that. But let me check in with any board members on the line if they have questions. Francie or Greg, questions for Susan?
Sure, thank you, Susan, for applying. It's really nice to hear success stories from APSHA residents. There are a lot of APSHA residents who are really happy with the program. And I think it's great that you want to give back to APSHA and serve on the board. There's a lot to learn about the APSHA regulations and protocols, but I'm sure it'll be easier for you being a realtor. So thank you for applying, and I don't really have any questions. I just wanted to say thank you.
Thank you, appreciate that.
Greg? I'm not sure. Greg has had to be kind of on and off, but let's see if he's with us. No? Okay.
He's on, I just don't think he can.
Okay. Okay, I'm not sure I have any more questions. I do think some of the points that you've raised, we have been trying to work on. Now we have we do have an inspection requirement for each sale. We have in our new rules a kind of a schedule of items that need to be up to standard, or either the price comes down or they have to fix it before sale, which didn't used to be the case, right? It used to be like you could sell junk and the buyer had the choice of buying junk or sending it down the line to the next lottery winner to buy the junk.
I think we were kind of past that when I bought my last one before the RO, but there was still some, it was being finalized or worked on.
And don't get me wrong, we've not made everyone happy.
You cannot make everyone happy. It just doesn't work.
It's tricky like that. But I do think there's a commitment to improvement that really is showing up at the board. So I appreciate your spirit of that, because even things like, we're still trying to flesh out homebuyer education and, things like that, which, maybe arguably should be happening all along, but we're doing a better job.
Yeah.
So I don't have any further questions. Just about the time commitment. We meet, we're scheduled mostly 2 Wednesdays a month. Some months that's 1 Wednesday because with holidays or otherwise. And just want to make sure you have availability.
Is it during the day or at night?
They're 4 to 7 at night.
4 to
They're
7?
in this room. There's a Zoom option if you can't attend in person. And that's, we have a pretty active board, I'd say. And we generally are focused mostly on policy and program improvements. Our kind of hearings have moved to a hearing officer process where we only hear them if they get appealed.
Okay. And that's like problems with people that aren't in compliance
with the
or
rules.
Different things like that.
Yep.
Okay.
Yeah, that's really.
Yeah. Oh, by the way, sorry, I'm
Never
out
the
of
fun. They're
compliance. I
never fun.
forgot to fill my thing out in May.
Okay.
I
It
will
took
be
me a
getting
little
on. I
time
just
to
got
do
the
it.
letter. I'm gonna do that.
Oh, good. Okay. Yeah, that'll be important.
The other thing is we have one more interview next week, and then we have someone who is an alternate now who's interviewing for this regular appointment, and then we would be filling the alternate. So we've got some options.
I noticed he was an alternate on there too.
We've got some options coming up. So
absolutely.
It'll be some time, and then the board has to have a discussion, and then Charlotte, we'll get back to you.
Absolutely.
Great, thank you.
Fantastic. Well, thank
It's
you
been so
much.
nice to meet you.
Careful out
And
there,
hear
It's nice to
about
meet
everything.
you.
Yeah.
Thanks so much for
Nice
your
to
time.
see you.
Cheers. Hi, Peter. Come on up.
Thanks for the heads up.
Hi, Peter.
Hi.
Welcome. Nice
Thank
to
you.
see you.
Peter's here.
you've gone through this before, but we'll just invite you to talk about, your experience on the board, why you'd like to be appointed as the voting member, and then we'll just ask some questions, and Patty asked me at break earlier if you have been an active participant, and I said very much so. Peter's reliably at most meetings, and I've appreciated all your thought and insight at the board. So
Thank you.
Yeah, thank you. So go ahead.
Okay. I think I joined a year and a half ago. I think I have that right. And it's been a great experience. Really enjoyed being on the board. I've learned a lot, different lens into the community, and really value that. And it's such an important asset and component to the community. I think there's so much that we can do to kind of improve the quality of life and health of the community through APSHA. So really value that opportunity. I guess I'm applying for a voting seat because I've been an alternate, and I feel like I kind of have the institutional knowledge now and have learned a lot about the program that I feel like I can represent the community well.
Great, thank you. Questions for Peter? Patty?
No, I but thank you for hanging in there as the alternate, and we have another candidate to interview next week, and I would like to see us be able to move you up to the permanent seat and then fill the alternate with. We're looking into whether or not we can just use the interviews we've already completed as of next week. So, but thank you for hanging in there and entertaining the troops without a vote.
Yeah.
Francie.
Yeah. Hi, Peter.
Hi, Francie.
Yeah, I've really enjoyed listening to your comments on the board when I'm able to attend, and I don't think there's any question about whether or not you deserve to be a voting member, so I will be in support of that, and thank you for carrying on the good work.
Thank you. Thanks a lot.
Great. I feel similarly. I think Peter's been a great advocate for transparency. He's really pushed staff to be very open about their decision-making and research, and I think that's been to great benefit of the board and to the community at large. So thank you for that voice. Yeah,
and he has a good sense of humor.
APSHA's a little dry. We may not always see that in that
Yeah.
setting, but yeah, we get along as a board. I think the board's actually functioning pretty well.
That's good to hear. Really good to hear.
And staff is doing a good job moving our work plans along, in my opinion.
You have good
Anything
leadership
you want to
there now.
improve? Anything you've like on your passion list that you'd like to see APSHA do better?
I think you touched on it in the last interview, sort of the education piece for people applying for the program, whether it's rental or ownership. I've learned in my year and a half, really, that APSHA is about qualification and compliance, which I guess the second education piece would just be the larger community and them understanding APSHA's role, because there's a lot of different groups involved, and so I think that education piece in the community I find a great challenge, and then just the education piece around what it means to be a resident or owner in APSHA, and I think the more people are educated going into it, the fewer surprises and disappointments there might be.
Great. I think that's great. Great. All right. Well, like Patty said, we have an additional interview next week, and then we'll give Greg and Jeffrey couldn't be here today, so they will view these interviews, and then we'll all have a conversation about our appointment. And Charlotte will keep you posted, and I'll see you next week.
All right.
Okay.
Thank you very
Thanks,
much.
Peter. Nice
Thank
to
you.
see you.
Good to see
Okay.
you, Peter.
Thanks, Francie.
And I think with that, we have covered all of our business on the agenda today. Is there any last open discussion that has emerged at all? No? All right. Well, we will adjourn until noon tomorrow. Thank you.
Right, thanks, guys. Thank you, Grassroots.